Happy and Healthy, a series to help you learn about available resources.
Hi, I'm Bill Hodges. Welcome to Happy and Healthy, a great series for senior Americans. Well, maybe not. I think you're going to find in this show that there's a lot of things you'll learn that even if you're not a senior, you're going to move forward on. This is a show on estate planning. I don't care whether you're 25 or 65. You have to think about that. And I have 4 really great guests who will give you an opinion from their standpoint on what you ought to be doing today in order to secure a financial future for tomorrow. My first guest is Mike Banner, National Education Director, Security One Lending.
Yep.
Mike, welcome to the show.
Thank you for having me, Bill.
My second guest is Rick Cantner, Jr., the Cantner Law Firm, an attorney specializing in estate planning, elder law, and probate. Welcome to the show.
Thank you. Glad to be here.
My third guest is Michael Smiskowski.
Thank you. Thank you.
CRC as a Certified Retirement Counselor, Financial Planning Advisor, LLC. And my final guest is Jessica Eilerman, representing the Chief Financial Officer, Jeff Atwater, Florida Department of Financial Services. Welcome to all of you on the show.
Thanks.
Thank you.
Let's start over here with Mike. Mike, would you give me a little bit of a background and share with our audience some of your expertise?
Yeah, thank you. I'm a 30-year career mortgage broker / mortgage banker that about 6 years ago performed my first reverse mortgage for actually one of my favorite aunts, like we all have a favorite aunt or uncle. And it had such a staggering difference on the quality of her life, changed it in so many ways that I actually converted a fairly large regular mortgage company 6 years ago into a reverse mortgage company.
Oh.
And right now it is become my goal, or maybe even close to my obsession, to educate the financial planning world and the traditional advisors in this country on the benefits of a reverse mortgage for our seniors.
Well, you'll get a chance here to share that whole idea.
Good.
Rick, tell us about your life as a probate lawyer.
Yes, sir. Well, I've been practicing in the Tampa Bay area for about 19 years now, and my practice focuses primarily on estate planning, elder law, and probate and trust administration. So we try to help families plan ahead of time for the future so that they can actually maintain some control over what happens inevitably in the future, whatever that may be. So that's planning through powers of attorney and wills and trusts and so forth.
You know, I don't know, I didn't see your arms be that long that you could actually get an arm around the word for the different probates and things of that nature and all the trusts. That'll be very interesting for us to hear that.
Great.
Michael Smiskowski, tell
Yes,
us a
sir.
little bit about your background.
Gosh, about 30 years ago in 1980, I heard about this concept of financial planning that sort of combined insurance knowledge with security knowledge with estate planning and risk planning of all kinds, and ultimately retirement planning. And I thought it sounded like a good idea to have somebody who knew a little bit about all of that advising people who don't have time to learn any of it and want to work with other experts. So I decided that was a good thing for me to learn, and I've been writing financial plans for successful clients since about 1980.
Wow, so that was kind of a beginning for that industry back in the 80s.
Yes, it was, yes. And the firm that I was with charged a fee for a financial plan, which makes a lot of sense if you want a professional to be working for you.
And
They
that
should
was early
probably
for
get
that,
paid.
too.
That's right.
That's right. Jessica Eilerman, would you tell us a little bit about your role here from the CFO's office.
Absolutely. The Department of Financial Services is a department within the state of Florida that really focuses on and really provides services and information for consumers, all consumers in Florida, within any realm of financial services. And that really falls in banking and securities and also in insurance purchases.
Jessica, how big is your department?
It's large.
One of the big state departments and one of the top 3 as far as state departments, is it not?
Absolutely. There are physically 13 divisions under the Department of Financial Services. So it is a large consumer-focused department within the state.
You have some new programs coming along. What are some of the new things that maybe we can share with our guests?
Absolutely. Just at the beginning of March, we're launching a brand new tool and website that is On Guard for Seniors. And it's a great tool for seniors, their families, their caretakers, when they're making financial decisions as they age.
All right, well, go back to that because I'd like to hear more of an expansion on it.
Sure.
Let's go over to the mortgage situation. You started out in a regular mortgage business.
Yes.
And then you converted that to the reverse mortgages.
Yes.
What is a reverse mortgage? Is this a government program?
Well, it's a government insured program. There's a lot of mixture, a lot of misinformation out there about this incredible product. Believe it or not, it's been around for almost 45 years, but probably no one's even heard of it till 5-6 years ago. And there's a couple of good reasons for that. Quite frankly, let's face it, the Great Recession that we're in has affected the entire country, probably everybody at this table, but no one's been more affected than seniors, people that are not in the workforce, point blank people that are in the asset depletion part of their life, not the asset accumulation as we are. So a reverse mortgage basically allows them to tap into their equity in their home, actually have no payments on this mortgage until the last borrower passes away, so no payments in their lifetime.
That sounds like a pretty good idea.
Well, the ability,
pretty good plan.
Yeah, well, the term cash poor and equity rich, what used to be such a rare term before this Great Recession, is now pretty common to people of all income levels. And the reverse mortgage is actually the only product that allows seniors to actually tap into that and use it for their quality of life while they're still here with us. So, in simple terms, it's an equity line on your house that you don't have to pay back till after you die.
Wow.
Pretty powerful.
We'll go back and discuss that a little bit further too. From a legal standpoint, why is it important for me to have a relationship with an attorney?
Well, sure. A lot of people probably think that the attorneys bite, or you walk in the door and you start having to ring up some money. But typically, most attorneys will sit down and talk with you and find out what your situation is, what kind of problems you're encountering, or what you want to plan for. In my office, like I said earlier, we are planning for the whole process going forward. It could be a young couple who has just had a young child, had a baby, and that's an important time to start the estate planning, because we want to plan for what would happen if both parents were to pass away, for instance, in a common accident. In that case, we want to have at least a will that has a guardianship provision built in that would name someone that would take care of that minor child through age of majority. So it's very important to start at the very beginning, and then an estate plan is really a lifetime process. It's not going to stay stagnant. It's not going to stay in that drawer for 30, 40 years, although unfortunately I see a lot of 20, 25, 30-year-old wills, and they become outdated. So the important thing is to keep that relationship, as you asked, with your attorney. And when something happens, you have a child that gets married or divorced or has children, has an addiction problem, has financial problems, those are times that would be good to sit down with your attorney and figure out, do we need to change the will, do we need to change the trust, what are the changes in the power of attorney, et cetera, any law changes, any tax changes. So there's lots of reasons why you'd want to stay in touch with, for instance, an estate planning attorney.
That's really a good point. I was thinking that most of us, I haven't talked to my attorney in probably 10 years. I mean, he's got my will and it's all locked up in his office. I know he's alive and kicking, but I really haven't sat down and talked with him. It'd probably be a good idea, no matter what I did, to every couple of years have an update on that, correct?
Sure. I try to offer my clients an annual review. If they just want to come in and spend however long, 15, 20 minutes and say, nothing's changed, but good to see you, and shake my hand or whatever, that's fine too. But a lot of times, just by the fact that they're sitting there, I can, have a little bit of time to ask them, are there any changes? Prompt anything, thinking in their minds about something that's going on in their lives. Again, there's so many situations in this economy, as we were talking about earlier, that there's a lot of people that have foreclosures against them, bankruptcies and so forth. So there may be some reasons why mom and dad might not want to leave a large sum of money to them through the will or trust. So again, it's just a good time to stay current. So whether anything needs to be changed or not, it's good to have that little review session.
Michael, Rick brings up a very important factor, and I think that, at least I got this from what he said, that financial planning is a family affair, not just mom and dad, but maybe mom, dad, the kids, and grandma and grandpa. How do you feel about that?
More than a family affair. Or I could say it another way and say it depends on how you define family, but even if you're just a single person, that's your family. Wise to have a financial advisor, and in this case, we'll talk about the difference between a financial advisor and a financial planner, but let me just say that with a financial planner, my clients are invited to see me every quarter. This gives more of an immediacy to what might be happening in their lives.
Let's define those terms then.
Okay, we'll come back. I just wanted to say with the things that change in our lives, sometimes our lives are moving so quickly that we don't even think of calling our attorney. But I'm going to be the one that says, that's an issue that we need to look at this person or that person, like your estate planning attorney. We need to contact him and let him know things have changed. When we get into a divorce, as an example, we're working with our divorce attorney, we may totally forget that we need to change our will or our trust.
Yes.
While we're in that. I'm going to be the one that knows what your plan is, that knows what your life is like, that knows what your goals and objectives are, and I'm going to be the one that suggests, well, now you need to talk to this specialist or that specialist.
So there could come a time when, in fact, life events before anybody else in the family does.
Oh, it happens all the time, yes.
Now, you were dividing up between a financial planner and a financial advisor, and you're saying there's a difference in definition there. What do you find is that difference in definition?
In our country, we've gotten kind of lazy, and we've started using this term financial advisor, which has no legal definition to it whatsoever. It doesn't mean anything. A financial planner has a real specific meaning. He's planning through a 6-step process of financial planning, which includes beginning with getting to know you, your current situation, your goals and objectives, and writing them down for you and for the planner. And then looking at all the alternative solutions and strategies we could use to help you meet those goals and objectives, and then monitoring them, as I mentioned, quarterly or maybe annually, quarterly, looking at whether or not we together are meeting the goals and objectives within the plan. That's what a financial planner does. And I mentioned earlier what some of the strategies are. Now, here's a difference. Mike says that the reverse mortgage is a product. I think of the reverse mortgage as a strategy to get you from point A to point B.
Okay.
It's a little bit different. A mutual fund just isn't another investment. There's a reason for using one fund or another. I'm the one that applies the reasons to that product and turns it into a strategy. Does that help?
That helps a lot. Jessica?
All right, so let me just finish that because it reminds me a lot of my brother. My brother called me the other day and he said, I'm meeting with my financial guy. I said, what does your financial guy do? What's his background? What are his designations? What's his education? And my brother said, I don't care as long as he's still making me money. And I said, gee, I think a lot of those Bernie Madoff clients said exactly the same thing.
But he was probably certified in all kinds of things, I would bet.
Not necessarily. I don't know that. But one thing you want to do is you want to know what the background of your financial advisor, again, which has no legal meaning, what that really means.
So that's my question to Jessica. How does the state help us to know what people are qualified to do?
Well, the Department of Financial Services specifically deals with insurance agents, for example, and insurance individuals. And the department will oversee the certification process and also to validate and regulate that for insurance agents.
What about for financial advisors? Is there or financial planners? Is there a definition within the state, a licensing of these people?
I don't believe so.
Well, maybe we can go back here and you probably have the answer to that.
Well, first of all, we want to stop using the term financial advisor because it has no meaning.
Okay.
If you're talking to me, you're talking about a financial planner.
Okay.
In order for me to discuss with you investments, then I have to be either registered with the SEC or the state as a registered investment advisor, or I have to be registered with the state and FINRA, the Financial Regulatory Agency, in order to buy and sell securities on your behalf. And I have to be licensed with the state to deal with insurance. So if I'm being compensated in any one of those three areas, I have lots of regulation and lots of regulators on me. But as far as a financial planner himself, I think it all gets down to your audience asking to see what the product is. What does a financial plan look like? What does the financial plan that I'm going to pay you to create bring to me? What's page after page? What are you going to do for me?
What are the legal ramifications of setting up these kinds of trusts and things of that nature in order to fit into his plan?
Well, I like to work together with other professionals that the client has, or else build a team if they don't already have them, because there's no one better than a financial planner to know the finance side, and I try to stay away from that. I like to have the big picture, and that's why it's good to form the team. But that way we can work together on a plan. There may be tax planning functions of the trust, or it may just be what we might call a simple trust, which would just be a revocable living trust that has some other advantages to it that are not necessarily tax related, but it could be the ability to avoid probate, or just to make things easier upon the death of the person that sets up the trust, the grantor. So there's lots of reasons, different types of trusts.
Would you explain to me just the word trust? There's a lot of, I know there's a lot of people who are looking at it and saying, well, trust, yeah, I've heard that term, and I know the banks have big trust departments.
Right, and there's a lot of misconceptions about what a trust is, or do I need a trust? The biggest misconception is that you have to be a Rockefeller, someone with a very large estate to benefit from a trust, and that's just not the case. A revocable living trust has a lot of functions and a lot of reasons why people would use that as a part of their estate plan. Again, including avoidance of probate, if that's a big issue. But I ask the clients what's important to you. If you were to leave this world and you had your son and your daughter left, do you want to burden them with a probate administration? The probate administration is the court process. Do you have any children with special needs? Again, getting back to that other thing I mentioned, do you have children that have addiction problems, or various different background problems? If any of the answers to those are yes, then we want to look at a trust because of the flexibility that it provides. But a trust really is an instrument, much like a will, with the basic concept of passing assets upon your death to your beneficiaries. So it's a fancy will, if you will, and it's a neat vehicle to do a lot of various things. No pun intended. But yeah, it's just an easy way, a good way to do a lot of different things in an estate plan, depending on what the client desires. But everybody's not suited for a trust.
Mike, given the parameters that you've heard each of them lay out about the things they see in estate planning, how does the reverse mortgage fit into this particular structure?
Well, sometimes it does, and really sometimes it doesn't, Bill. Of all the products being represented, with these guests, the many that you're educated on, the many, many different vehicles that an estate attorney can. The reverse mortgage by far is the most simple. The true fact of the matter right now, and it's unarguable, is we're all just living longer. Modern science, medical technology, we're living longer than our parents, they're living longer than their parents, and of course we're living so much longer than our grandparents. And with the cost of living and the recession and things that are going on in this country, outliving your savings is a fact of life, not just for the poor or people that maybe that can't afford a financial planner or an elder estate attorney. It's a fact of life for many, many people. Recently, there was a study done in Boston University, which is done every year, I think, for the past maybe about 12 or 15 years, where they list the #1 fears of a senior. And of course, #1 has always been death. Until this past year, 2011, the #1 fear in a senior's mind is outliving their savings. #2 is death. How could death be #2? They're less worried about dying than they are running out of money before they're dying. And many of the vehicles that these professionals are talking about need to be funded with something.
Well, I think there is some problem.
And that's when the
with
reverse
thinking-
mortgage could step in and go, excuse me, here we are.
I think there is some problem with dying is easier than saying, would you like a burgers with that or something?
Exactly.
And just
So-
behind that is the fear of going to see an attorney.
I think dentists.
That's true.
Yeah,
I really agree with you. I have many, many friends who retired many years ago. We're blessed to have, because we ballroom dance. Phyllis and I are blessed to have many friends who are now in their 80s and 90s even and still dancing.
Sure.
And as I talked to them, they retired a lot of years ago with what they thought was plenty.
That's right.
But then 2000 came along and the market tanked. 2008 come along, the market tanked on them.
$4 a gallon
and
of
now, well, that and 1% on CDs, if you can get it.
Right, yeah, that's exactly.
And so they're saying, whoa, you know, I thought we'd planned, but who could see these things coming? I don't think anybody could.
The people that you're talking about, 80s and 90s, it happens to be my favorite generation, the greatest generation. And many young people don't realize they're the greatest generation because they really are the greatest generation. This wasn't just a nickname. They truthfully were. And there's a very big philosophy in our industry that permeates our industry, is that that generation did only one thing wrong. They lived too long. And that's terrible. That's just terrible.
And the rest of us are facing that. We're moving in that direction.
Exactly.
I don't care whether you're 25, 35, 45, 55.
That's right.
If you don't plan now, you're going to be in the position we've just talked about.
Longer
It's very
lifespans.
important.
Longer lifespans is definitely a double-edged sword. And if I could say one misconception about the reverse mortgage that permeates the financial planning world, the elder care world, and they're just coming around, is that it's a very needs-based product of last resort. Oh my God, I'm broke. Mom and dad better get a reverse mortgage. And in fact, that is the way the industry has been portrayed and even grown in the last 5 years. But in fact, it was really created to be a tool, an element of a financial plan for people of all income levels to be able to tap into, I think, what is approximated now, even after the recession, about $3 trillion in equity of people 62 and above to help them, enhance the quality of their life while they're still here. And it's a staggering product. It really, really and truly is.
Well, I think if I
Go
could
ahead.
comment
No,
on
go
what
ahead.
Mike said, one of the things that's wrong with our thinking is that it is only for poor people in
Exactly.
the last resort. Low income, don't have any more money, spent their money, now what do we do? It's not true. I had one gentleman come to me, became a client. He and his wife have accumulated well. Big mortgage, balloon mortgage coming up, getting ready to retire. If they added in a mortgage payment, they couldn't afford to retire.
Right.
But if they did a reverse mortgage, paid off the existing one, didn't even need any more income, but just got rid of that mortgage payment,
Yeah.
Right.
they can retire. It was a great strategy to use for them, gave them great peace of mind, which is what I'm supposed to bring to you and my clients.
Do you see the same
Excellent
thing,
point.
Rick, in your practice?
Well, I was going to add to that. I even have a client right now that is in foreclosure, and we're looking at a reverse mortgage because he's over 62 and has enough equity in his house. He just doesn't have enough cash flow to make the mortgage payments.
Right.
So we're going to do a reverse mortgage, get him to pay off the existing mortgage, and then he'll actually have a cash flow if he desires to take it. So there really are a lot of misconceptions, and unfortunately, the reverse mortgage has been portrayed in a bad light for a lot of years, but it has great use in a lot of different areas.
You think Robert Wagner would give you bad information?
Fred Thompson wouldn't either, so no.
And now the Fonz. And
That's right, the Fonz is out
Pat
there.
Boone. Pat Boone is
Yeah,
doing
Pat
something
Boone,
good.
they're all doing it.
Who
yeah.
can you trust more than Pat
That's
Boone?
right. I wouldn't even think about it.
But I
Jessica,
hope, you're
let
hearing.
me ask Jessica,
Sure.
what is the state, how is the state working in this financial area?
That's a good question. I think Mike brings up, and actually everyone did, touched on, as our older population continues to elongate their lives through many different reasons. I'd like to just point out a few facts about the state of Florida right now. Currently, the folks that are 85 years of age and older is actually the largest growing population in our state by percentage. And to no surprise to anyone here, you know, Florida is actually #1 in the nation for our population age of 62 and older. So we're looking at already a large population living longer, growing, and expanding. So there's a lot of issues of importance here. And we touched on earlier the role the family plays and the role of looking at that longevity of life and the concern and stress and anxiety that can sometimes come up because maybe they don't have an appropriate plan or did not think, you know, something, you know, issue X came up in their life or the Great Recession. They didn't think about those things, and now they find themselves unprepared. And we at the state really believe that we need to protect our consumers and really to bring that back together between the anxiety and the worry and some of the unknowns that occurred. Our seniors fall prey to some scams and to some fraudulent behaviors, and we are very concerned about that at the state. So education and information and assistance is so important to us at the department to provide an outlet for folks who don't know tips and tools that they need to be looking for. They have a concern, they can come to the state and we can help them with that.
You know, the state is some kind of amorphous thing, though. Where does one go? I noticed in a program we just did on senior scams, you could go to the Consumer Protection Group here in the county, we could go to the Attorney General's office, we could go to the FBI if it happened to be something that even looked federal. And they told you to come anyway, and they'd tell you whether it was or not. But what if I wanted to go and have something checked out in the CFO's office? What would I do then?
It's a great thing to bring up. Chief Financial Officer Jeff Atwater is very committed to assisting our seniors and our entire population because, frankly, everyone can be a victim of fraud or a scam of some sort. And they can call a number, 1-877 MyFLCFO, or if they have internet access, www.myfloridacfo.com, and there is a plethora of information that can help them out, direct them where to go, and really consumer services is the best division for them to reach out to.
It just seems to me that a lot of the older people are just having that kind of a problem, and a lot of them don't know where to go. I have them call me.
And
they'll say, Bill, what are we going to do?
I think that's a great point because what we find is seniors are scared to come forward thinking they may be victim to some kind of scam or fraudulent behavior because they don't know the facts. And so that again pulls us back into providing some resources and being an assistance for them so they can get those services. And really we would encourage anyone who thinks there might be an issue to please find out about it now. Don't wait.
We're going to take just a short break. And when we come back, we'll put those numbers up on the air, up on the screen for you to see. So you'll have the numbers. Ladies and gentlemen, it's been a great half. We'll see you after halftime, and we'll start the game again.
George, it's a great deal. Only used a couple of times, and it gets great parsecs for very little dilithium crystals.
Well, I appreciate the offer, but what I really need is information about Social Security. How do I find out what my monthly payment will be?
Online.
How about if I just want Medicare?
Online.
Oh my. We'll boldly go to socialsecurity.gov.
Let's go kick the tires.
Whew, getting health information is a nightmare.
It's all in how you look at it. To you, it's a pile of books and reading until your eyes drop out. But to me, I go straight to NIHseniorhealth.gov, click on what I want, and boom, there it is.
NIHSeniorHealth.gov, the medical website created with older adults in mind by the National Institutes of Health.
Getting health information at our age is tough.
Yeah, it's all how you look at it. To you, it's a pile of books and reading till your eyes drop out. But me, I go to NIHSeniorHealth.gov, click on what I want, and bingo, there it is.
Well, thanks for the tip.
NIHSeniorHealth.gov. It's easy to use. You can make the text bigger, make the contrast better, even make it talk to you. If only everything else out there were senior friendly. NIHSeniorHealth.gov, built with you in mind.
Hi, I'm Bill Hodges, and welcome back to Happy and Healthy. Today, we're doing a program on estate planning. We have a great panel here, all with great ideas representing a whole different segment. And I'd like to go back over here and have you tell us a little bit more about the extended mortgages, the reverse mortgages.
Well, you have to be 62 years old to get a reverse mortgage. You have to have equity in your home. This is not like a normal...
Can't go out and just buy one and...
No, you can't go. Actually, it's funny that you say that. 2 years ago, very few people are aware of this. A new reverse mortgage was introduced to this country called the purchase reverse mortgage. Everybody thinks the reverse mortgage is just for people that already own their home. But there was a program created in October of 2009, 2010, right around there, beginning of 2010, specifically for the 2 million realtors of this country to use, because it's down to 2 million, it used to be a lot more, to use for a senior to purchase a home. And just to give a quick example of that, someone comes to a certified financial planner, and they just sold their house up north for $600,000. Of course, they expected to sell it for $1 million. So this has put a damper on their financial plan and their quality of life for the next 20 or 30 years. So they've sold their home for $600,000 up north, and it's the American dream to come to Florida and retire, and they're going to buy a home for $600,000 down here. What is their goal? No payment for the rest of their life. And possibly a financial planner or a elder care attorney who's educated in reverse mortgages suggests that possibly they put $300,000 into that $600,000 house. Secure a purchase reverse mortgage. This does not give them income for the rest of their lives. We give it to them all up front because the seller of the home needs it the day they close. Now they've achieved their goal of their $600,000 dream retirement home, but don't they have an extra $300,000 in liquidity?
And no payments.
And no payments? They have their retirement home, they have their payments, and again, what can a professional like you, for a 65-year-old person, do with $300,000 to make sure 20 years later, when they're 85, they're not in front of Walmart going, would you need a cart? Or in McDonald's going, would you need fries with that? The purchase product is a staggering product, and very few people know it's there. But again,
is it still there?
It is still here, and it's growing rapidly. It really and truly is. I'd say NAR approximates, NAR is the National Association of Realtors, has taken an estimate that they feel 90 to 95% of the realtors in this nation don't even know this program exists. So one of the things that our company does, Security One Lending, is that we actually have the only class in the country that is on the NAR website offering education to the realtors on this. But it can have no mortgage payment for a senior. What a staggering effect it can have on their lives. But basically, you have to be 62 and above to get this. Both borrowers should be 62 and above. I say both because you always want the youngest borrower to be able to stay in the home after the oldest borrower dies. Of course, it's usually mom. Dad dies in his mid-80s, possibly reducing the income of the household, greatly. The last thing mom wants to worry about at that point is, how am I going to keep up this house? So when both mom and dad are above 62 and one passes away, the remaining spouse...
So both have to be above 62?
Both have to be. Legally, you can actually remove a younger borrower. Let's say dad is 65 and mom is 60. Can we legally do a reverse mortgage for that couple? Yes, we can, by removing the 60-year-old borrower from the transaction. Morally and ethically, this industry does not like to do that, because the best thing about a reverse mortgage is no payments.
Right.
But the second best thing is not worrying about the spouse you left behind. That's right. Knowing they can live in that house with no payments. If they weren't on the mortgage, they don't have that right. So that's another little thing that I discuss constantly with your office in Tallahassee. Legally, yes. ethically and morally, no, do not do it. So
Mike, do they have like a 1 year period after their, if that were the scenario, do they have is it a 1 year period that they can?
Actually, the reverse mortgage has built into the
refinance?
contract, they have 6 months.
6 months.
But what we're seeing with reverse mortgage investors is due to the recession, they're giving numerous 3-month extensions to people as long as the remaining borrower or the heirs is making an active effort to sell the home. There's no reverse mortgage lender out there 3 seconds after your mom and dad dies, knocking on the children's door going, sell it, sell it, sell it. Ultimately, it must be sold. The debt must be paid off. But it's, no one's knocking on the door as soon as dad is pronounced dead or grandpa is pronounced dead.
So as it goes down in value, or as far as the loan is, you get the money from the lender, and that takes off of whatever the net value was at the beginning.
That's right.
By a certain prorated scale, I assume, it comes down.
Dollar for dollar.
Dollar for
And-
dollar.
and dollar for dollar. Okay, and at some point, if my parents, who are long since gone, but if they were in this program, and they took it out, and the person was, well, they were 65 when they did it, they started taking money out, and they died 4 years later. Whatever assets are still in that house then come to me minus what I have to pay back. Is that correct?
That's exactly right.
Come to the beneficiary, yes.
Okay, so it's not a winner-take-all kind of thing.
No.
No, one of the amazing
A
things.
lot of people think that.
Yeah.
Well, that's because there was so much bad press
That's right.
when reverse mortgages first began. Since then, they've been tweaked by legislation and regulators over and over again to make them better and better and better. Further, we in the financial planning community have grown to be more educated on the strategies when we use this product.
Right.
And that's a great difference to understand.
This is a strategy, isn't it, Rick?
Yeah.
It is, and they're also, I know a little bit about these, they're actually actuarial based. So if the person who did the reverse mortgage outlives the equity of the house, they're a non-recourse loan. So the lender actually can't go back and say, well, we gave you $150,000, but your house is only worth $100,000 now. And we're seeing some of that. I've seen some reverse mortgages
A lot of it.
Yeah, they can't do
Especially
anything.
when the market depressed like it did.
Exactly, with the property values going in reverse, it's not that uncommon now. It used to be pretty uncommon to see that situation, but there's nothing they can do about it. So it's again a non-recourse loan.
So
They
if
can't
you
go back
outlive
against the
your
estate.
equity, you just keep getting checks, right?
Well, until they've
that true?
paid you out the full amount,
Okay.
but they can't go back against like your estate and say, well, when we took the house back, it was only worth $100,000, and we actually gave you $150,000 over the years, so we want $50,000. They can't do that.
Yeah, Rick has brought up an excellent point that I actually should have brought up, but I'm glad he did. Every mortgage, I don't want to pick on any bank, every regular mortgage, people are dying now and their house is upside down. Who knows the statistics? Some people say 30%, some people say 50% of the houses in this country are upside down. With the reverse mortgage being non-recourse, we go forward 20 or 25 years, the house is passed on to the children. It's another myth. The reverse mortgage people do not take the house. It goes to the children or the estate or the heirs, and the house is worth a lot more than mom and dad owe on it. The children sell the house, they pocket the profit, the American dream. There's their inheritance. But in today's world, 5 out of 10 times, the house is upside down. In a normal mortgage, it is very possible that the estate or the heirs may have some liability because that house has been passed to them. It could affect their credit. In a reverse mortgage, as Rick noticed or mentioned, it's non-recourse. If in fact the house is worth less than the current market value, they send the keys back to the reverse mortgage lender. There is no liability to the heirs or the estate. Remember, this is an FHA insured loan. 25 years earlier, when mom and dad got that loan, they paid MIP insurance, mortgage insurance premium. And 25 years later, that premium kicks in and it pays off the bank, the negative. So if there's profit, the heirs get it. If there's not, no liability. It is truly win-win.
Jessica, how many complaints does your office receive on this process? Maybe people not understanding it or
That's tough to quantify. However, I think what Mike brought up was a really good point with the word myth. There's a lot of misinformation. There was some bad press when reverse mortgages first came out a few years back. There's just misinformation, myths going on about their options. And that's why we so strongly support seeking out information and trying to help and assist to answer those questions for individuals so they can make the best decision and be educated on those, and try to assist gentlemen and professionals like you all, giving the folks the information they need to make the best decision for their particular situation.
Michael, let's leave reverse mortgages for a while and look at some other investment tools, as you point out. What do you think are the things that people should look for in these investment tools? If I'm 55 years old.
Solutions to their specific problems is what we term as suitability. Suitability. And we have a wonderful series of laws in the state of Florida that went into effect in October of 2009 called the Senior Suitability Act. And in that, there's a whole lot of protection that's been added to seniors. One of the things that we see a growing use of is the use of annuities to help with this problem that Mike so eloquently spoke about, people running out of money. Annuities can also provide a lifetime of income that they cannot outlive. It's the main reason why we have annuities, which have been legal for decades in this country and for hundreds and hundreds of years in the world. But again, it's the application of the provisions in that legal contract that we call an annuity, just like we call a trust, but what is it? It's a legal contract with certain provisions that are there to benefit you. That's the same definition I would give to an annuity, a legal contract with provisions. May or may not be the right provisions for you. May or may not solve your provisions. Pardon me?
How does one know that? If I came to you as a financial planner and I said, here I am, here's what I have. I'm X number of years old, I have a wife, we want to go together on this. Now, what would you ask us so that when people are watching this program and they go in and they sit down with people, what kind of things should they be asking?
I want to tell your audience that I didn't feed him that question. That's a great question. And what you should be asking.
Thought of it all by myself.
What you should be asking, and what you should be asking is what's in the plan. And it needs to start with an evaluation of your spending. We want to know what your essential spending is and what your discretionary spending is. Because whatever it is today, it's going to be very similar in retirement. It's not going to be the same. It might be less, as everyone says it's 70%. Not true, folks. It might be more. Ooh, I've retired now. I have 365 Saturdays. What am I going to do with all those Saturdays? So what we want to do is match up your guaranteed income to your essential expenses. Why would that be? Well, because mom likes the electric bill paid. So we want to make sure that we've got enough money coming in every month to pay essential expenses. Then we want to look at discretionary expenses. How much do we need to fund there? Once we've got that picture of your spending, then we want to know what kind of assets. Do you have a pension coming in? Do you have Social Security coming in that we can match up against the essential expenses? And then other income that will match up against discretionary. If there's a gap, then we need to help you solve for the gap. And there's a number of different strategies that we can use to help someone who's 45 or 50 or 55 solve that. There might be different strategies for someone who's 65. For instance, if they have a gap, they may have to wait, defer retiring. You know, if you probably know this, Bill, but if you wait and not take your Social Security at age 65, your increase in income goes up 8% every year until you're 70. So I need more money. My Social Security isn't enough. I'm going to defer for 5 more years and get a 40% increase in my Social Security income payment. Good strategy. I need to know that. My clients need to know that. I need to talk about that. You need to see that in a plan. Does that help?
That helps a lot. Rick, people coming into your office, what should they ask you and what should they expect to get from you?
Well, they don't necessarily need to ask me a lot because I try to pull it out of them. I have a questionnaire that I put in front of them. I ask them questions face to face. So we try to figure out in that process, what are their priorities? What are there any unique situations or scenarios that they have? Because everybody's estate plan is different than the other. They have different goals, objectives, different assets, types of assets, amount of assets, different problems with kids, relatives, etc. So I try to pull it out of them, and based on what they tell me, that's where I go with my estate plan. One of the real unique things, or I wouldn't say unique, but one of the more common areas that I find that are problematic are with beneficiary designations on various different assets, because people have a lot of misconceptions about how that works. One of the things they do is they might set up some life insurance, for instance, and name a beneficiary on there. So it's husband sets up a life insurance policy and they have their wife. And maybe they did that 40 years ago before they had kids, and that's where it ended. And now wife has passed away, predeceased the husband. If that asset, if husband now passes away without a replacement contingent beneficiary, we're looking at a probate situation.
Right into the estate.
Right into the estate. And another thing is that people have set up accounts through the years, and they have paid on death designations and so forth. That, for an example, maybe they have a son and a daughter, and in their will or trust it says 50% to son, 50% to daughter. But on that designation, they've closed out some accounts, but they have one. Let's say they have one CD that's paying them great, and it's $50,000. They believe, a lot of the clients that come in, that when they pass away, that CD somehow goes through their estate, and so it gets split between their 2 beneficiaries, which is not accurate at all. We have to look to the document or the asset itself, see how it's registered and how the beneficiaries are designated there, and it will go to them. It won't be controlled by the will or the trust. So you could have potentially set up a really inequitable situation among your beneficiaries if you don't keep tabs on that and adjust them as you go.
I personally am a great believer in financial advisors and in having a good attorney. It's just something. Financial planner. Excuse me. Sorry about that.
It's okay. We could make a statement about a difference between
I need a card.
an advisor and a salesperson. But I'd like to go on with what Rick said, and that is that one of my favorite.
Before you do,
Sure.
let me just, the one thing I wanted to be important for the people watching this. A lot of you may have moved from a different state to this one. Do not assume that whatever state you came from had the same laws the state of Florida has. In Ohio, if I and my wife owned a home and I died, it automatically went totally to her. That is not true in the state of Florida. She can claim 50% of it. And then if you have children, you can run into problems. So don't just assume when you come to the state that it's the same. Find a good tax attorney. Make sure that he goes over it with you, especially on your will. Now, sorry, but go ahead.
No, you make a great point, and it takes more than one person. For instance, I work very closely with Rick over the years with a number of our clients, and what I might know about their personal situation, he may not. They may not think to tell him.
True.
But in my plan that I've provided to Rick, for what we see as needed in their estate planning, he'll pick up on what's there and what maybe isn't there. And that really helps the client know what they're doing. So what I'm saying is your estate planning attorney and your financial planner need to really be able to work well together and enjoy working well together, like I do with Rick.
Jessica, I promised when we broke that we would come back and give those numbers and that website again. So if you will, give the email and the website for them.
Absolutely. You can reach the Department of Financial Services through visiting www.tbcn.gov. www.myfloridacfo.com, and you can also call 1-877-MY-FL-CFO. And I'd like to just take a moment to talk what we briefly mentioned earlier at the start of the show, was a new tool, On Guard for Seniors, that is recently come out at the beginning of March. And that is a tool, again, as I mentioned, for the entire caregiving family structure around the senior. So the senior can find answers, but so too can family members, caregivers. And it goes back to that education piece, to providing some information to help clarify some terms that professionals may be very comfortable with, but a senior or their family member may not be. So it's something as simple as a library of terms that you frequently hear.
Well, that's important.
Absolutely. Often we have heard and worked with seniors that have had an issue and they don't know what to ask, and they're embarrassed to do so because they want to remain in control of their finances and in control of their estate and their information. And sometimes they feel if I don't seem I know, perhaps my family might step in and make some decisions for me that I'm not yet ready to give to them. So we really try to provide those kind of resources through this new tool online. And beyond that, there is another great tool out there, and it's My Money Matters, and that is for any Floridian to utilize to help give them some tools to learn how to amass greater personal wealth.
It's just so important, and you strike on a very important thing. Ladies and gentlemen, when you're dealing with older people, especially if they're the sons or daughters, and you're dealing with somebody older, one of the last things that they can do as adults is to handle their finances. I remember my mother was dying of cancer, and her mind was going, and she had to take all these drugs, and I had to take her checkbook away from her. Right. And she sat there with tears running down her face, and she said, but it's the last adult thing I get to do. And it broke my heart. And I gave it back to her, just didn't give her any stamps. But the fact is, we are in a situation where everybody has to be very, very concerned that they are hiding things from us, that they don't want everybody to know, correct?
Sure. It makes me think of a point also to I talked about how we want to have the family stay in control. A situation where, like in that scenario where there's an adult who is doesn't have mental capacity anymore to handle their own affairs, their checkbook, paying bills, and all that goes with it. We want to make sure that they have some planning in place so that we don't have to resort to the court system. It's a beneficial process, but if we can avoid it and do so safely, that's the ideal situation. So we want to make sure we have the durable power of attorney in place that's properly executed. And we've had a recent change to the statute in Florida on a durable power of attorney. But we want to have healthcare surrogate in place. We want to have the living will so that end wishes are honored if they don't want to be kept alive artificially. So that's all things that we can do to help the family and the individual stay in control of even the bad situations.
That'd be something a financial planner, I would think, would want to see done also. Is that not correct?
Well, we would want to know what the client needs. So we would talk to the client about what they want to happen and then determine what documents we may want to provide for them. That would go in an estate planning portion of the financial plan. And then to draw the documents, we would visit an estate planning attorney like Rick to go over the plan and make certain that we've covered all the bases and then create the written document. That's how that works.
There really is too much for one person to know.
Absolutely true.
I'm a great believer,
very difficult.
I'm a great believer in people doing what they do best. I was just talking to somebody the other day in business that they were trying to be all things to all people, and the things they did best was falling by the wayside because they were trying to do too many things. Mm-hmm. As I said, I'm a good planner when it comes to presentations, to training sessions, and to doing things of that nature. But when you give me finances, my eyes start to glaze over. And it's not my area. Yeah, I could go learn it, but that would be a lot of work, and I don't think I'd ever got as good as any one of you sitting at this table. So having a team to back you up is important, is it not?
Absolutely.
Absolutely.
And I think something that you've brought out by this hour here today is that financial planning is not just investment planning.
Exactly.
And if you're paying someone for just investment planning or investment management, that isn't necessarily financial planning. People need to understand that. That's sort of just an integral part of financial planning. It's just a part of it. That's all it is. Yep.
One last thought. Let's talk a little bit about the reverse mortgage again. Just give us a quick overview of it for those that maybe missed it in the first part of the program. Very quick.
Very quick. You have to be 62 and above. It's an incredible vehicle or tool to tap into the equity of your home and have no related debt service with that equity, which in layman terms means no principal and interest monthly payments on that mortgage for as long as you reside in that home. Many people make the mistake of saying as long as you're alive. No, it's as long as that home is your primary residence. It's a staggering product. Many people feel that you have to have a mortgage to get a reverse mortgage. Many people don't know that if your house is free and clear right now.
I think that was a great idea.
Right.
I hope everybody saw that part. What are the things that somebody coming to you ought to ask, or what can they expect?
Well, if they're coming to me for estate planning, we want to find out what their goals and objectives are primarily. Do they have minor children? What types of assets do they have? Isn't avoiding probate a big issue for them? Is avoiding the federal estate tax a big issue for them? The size of their estate? We have a whole litany of different questions that we want to ask and pull out a client, because again, it's a unique plan for everybody.
So these are the things that they should look for in anybody they go to that's an attorney.
Correct. And a lot of times we get not only the end client, but we also have the sandwich generation, which is the children of the older clients who are getting in touch with the attorney to plan for the future.
Get advice on what to do.
Right. I mean, it could be a Medicaid or nursing home situation, or VA benefits and all of that too. So there's lots of things that
so many more things we cover. Michael, quickly, overview.
I would say that people need to have objective advice in order to make smart money decisions.
And know what they're spending it.
And one of the problems is that my clients can't possibly know what I know, because I have hundreds of experiences over my 30 years. They may have the experience once.
Yes, I can see
So
that.
needing objective advice from a planner really helps make smart money decisions.
And Jessica, I'd love to have CFO Jeff Atwater come on my Spotlight on Government program. I hope you'll take that back to him.
Absolutely, I will. Absolutely.
Is there any last thing that you'd like to share with us?
I would just like to encourage everyone to arm yourself with information, ask tough questions, find what you don't know, find that out, seek that information. There are many tools available to our seniors and our citizens in the state of Florida, and I just would encourage everyone to reach out and get that information.
Well, I want to thank each and every one of you for doing such a great job. You've done a real service. There's a whole lot of people out there going to watch this program, and they're going to say, oh, I know what this is. I know what this is. They're going to find that kind of information, and they're not going to be taken in by people who aren't qualified to give them that information. Ladies and gentlemen, this is Happy and Healthy. This happens to be an estate planning portion of it. I'm Bill Hodges. You're unique, you're special, and you're great. Tell yourself so often, because you are, you know. Thank you again for being with me.